May portfolio update. Since last month's revealed, I sold 2 positions, locking in a 148% gain on one stock. This was my portfolio 1 month ago. I will tell you what I sold and why. There are 2 very different decisions behind my selling, and I will also say one stock I'm watching to possibly reinvest. Let's dive in. Several of my positions have reported earnings already, specifically Google, Airbnb bookings, Yeti, Hims, and Logitech have reported earnings already, while Abercrombie and Elf Beauty are missing and will report in the coming days. I've listened to every earnings call of each one of my holdings, and I would suggest every investor to do the same. I was very pleased with the results of all of the companies but one. Now, without entering into technical, boring details, most of my companies were in line with my expectations. The important part here is that the companies keep growing and delivering as imagined, and that the management doesn't come up with some crazy idea that could destroy potentially shareholder value. This was not the case of any of my holdings, and most of them deliver very strong results. One, however, raised a red flag. Let's say orange flag. Logitech. So Logitech is a mature company. I don't expect crazy growth from Logitech. I think in my value ratio I projected just a 4% growth year to year, but the revenue was flat. So this is the first things that I kind of dislike. But this can be, it's just 1 quarter. Could be that you get flat revenue for 1 quarter, is not a big deal. The things that really piss me off is that flat revenue, but all the expenses went up, especially marketing expenses. Okay, this is possible. I mean, I don't like it, but possible. But also like the managers pay themselves more, so more administration and general expenses. So the managers pay themselves more when the revenue is flat. And that I really don't like. This is something pissed me off. It was already one of my smallest holding exactly because I had kind of low conviction. The earnings call didn't leave me a good feeling at all. So the stock was already 20% up compared to my buy-in price. So I thought, okay, let's take this small win. And at the end, 20% isn't even really that small, considering that I just held the stock for less than a month maybe. So I think, the results were actually quite good. Overall, I'm proud of the timing I entered the market. This is what I was saying 1 month ago. So there is bad news, right, left, bad news everywhere. But exactly because the sentiment is so negative, I feel it's a good time to be greedy. I'm buying. My feeling was right, and my contrarian bias paid off. Sentiment flipped fast. Now we get good CPI, trade deals, and the market is suddenly feeling very optimistic again. We are not in greedy territory, but we are going in that direction, and that makes me way more cautious. Now, it's clear by now that the American president is completely unpredictable, and I fear we will have 3-4 years of crazy up and down swing, and probably a recession. Even if Trump finds an agreement with China, tariffs will likely increase, and this will have negative consequences for the global economy. Therefore, being more selective and building up a cash position seems like a smart play for my portfolio. This cautious approach directly influenced my decision to sell my best performing stock, Hims and Hers. I made a video dedicated to this company, claiming the fair price was $49, and when the price hit $25, it was impossible to pass. It was trading at half the fair value. It was also very close to this trend line that I believed would offer a price support. I was right, and my timing was perfect. In 1 month, it hit the fair value and went even higher. My only regret is that I bought just 500 shares. The stock is very volatile. It has a crazy good momentum right now, but I feel it's not a bargain anymore. It's not like 1 month ago. So I still see the company like a very high risk bet. so I decided to cash in my winnings at 62.63. I want to be clear, if IMS keeps delivering, the management guided more than 6 billion in revenue by 2030 and 20% margins. Now, if I apply my value ratio to these numbers, this means that in 2030, IMS would have a fair value per share over $150. So, since the market is forward-looking, I would not be surprised to see the company double or triple again next month, in a couple of months. Especially considering these volumes that we got lately, I believe it's possible. Would not surprise me, and I really hope this happens for all of you that keep holding IMS and watch my channel. I'm very happy with my win that I made in 40 days. I turned $12,500 in 31,000, up 148% or $18,500 profit. If you're skeptical, I understand, you're right. Here is a screenshot from my bank. You can watch my old videos and you can see that I want to be completely transparent with all the results, with everything I do, and I speak openly about my losses as well. This year I've closed 3 trades, all disclosed on this channel, and these are the results. To be honest, I'm a bit surprised that most people really don't care at all. I would have expected that with this strong and lucky performance, more people would have subscribed to the channel. This is clearly not the case, no one cares. Let's see my portfolio today. Most stocks are green, Abercrombie, ticker AMF, is still deep in the red, and it's the only position I'm regretting. I mean, it's probably the most undervalued of my holdings, but I don't like to have such a big position in a company with a weak moat. And the moat is weak not because Abercrombie is weak, not because the company is bad, but because fashion, in general, the fast fashion industry is such a competitive environment with such a low barrier of entry that it's basically impossible to be sure that Hollister and Abercrombie will be here 20 years from now. So, what's actually my portfolio strategy? It's very simple. I have 3 companies: Google, Airbnb, and Booking, strong moats. Companies that I believe will be dominant for the next 10 or 20 years. And these are my long-term compounders. I'm holding without plan to sell them even if they're already in the green. The other holdings I have, Anf, Elf Beauty, Yeti, are more speculative bets. These companies are cheap, I bought at a price I believe was a deal, so I expect them to bounce back higher to close my position and take profit. The sooner the bounce, the better. Because are decent companies, but they don't have strong moats, I'm not sure they will be around 20 years from now. IMS for me was also part of this bucket. When these companies hit my fair value, my target price, I'm likely taking profit and cashing in. I don't expect every one of these bets to be a winner. I'm aware this is a very risky way to invest. I'm not like day trading, I'm still looking for value, but I'm not even following Buffett best advice. Now, I have 42k available from Logitech and IMS liquidation, and I'm looking into good deals, but I'm not finding anything very compelling at the moment. I like Google, I like Berkshire, I'm looking into United Health. It's a giant that lost almost 60% in 1 month. Looks like it can't catch a break. Poor result, suspended guidance, CEO out, lawsuits. The panic is real. I don't like this kind of huge healthcare companies. I don't think I will buy into United Health, but I'm looking into it. I want to understand if there is value. What do you think? Do you think it's oversold? I'm a bit hesitant to buy any company right now because most of the company I would like to own are very expensive at the moment, and the macro situation is not really stable. I believe tariffs will have a negative impact, so I'm being very cautious at the moment. This week I'm traveling to Italy to meet my family, so I might skip a week or 2 of videos, but I promise I will be back. Please like, subscribe, and thank you. Thank you very much for watching Adri Economics. Peace out.